Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Kim Sei-wan, Professor of Economics at Ewha Womans University. Professor Kim, good afternoon. Thanks for coming on today.
Good afternoon, Devin.
Well, of course, Professor, we're due to hear from the Federal Reserve in the coming hours about its decision on interest rates. It seems like the choice is either 75 or 100 basis points, a hike, which would take the Fed funds rate to its highest since before the pandemic. As long as Korea's policy rate, though, stays lower than the Fed's, it seems capital will continue to flow out of Korea. What impact do you see on the Korean financial markets going forward?
As of now, U.S. Fed's base interest rate is 1.75%, while Bank of Korea's base rate is 2.25%. So if U.S. Fed raises its rate by 0.75% today, as widely expected, U.S. rate becomes 2.5%. It means that until next Bank of Korea's monetary policy meeting in late August, U.S. base rate is higher than that of Korean rate, which is a strong negative factor to $1 exchange rate and capital outflow. But in financial market, the interest rate inversion between U.S. and Korea is much expected and reflected to stock prices already. So market adjustment would be limited even with U.S. higher interest rate today. However, Korean won's depreciation will be more accelerated by stronger demands for U.S. dollars, driven by both of higher interest rate in U.S. and declining global economy for this year.
Right. So priced into the stock market, but we could see further deterioration in the exchange rate. Well, stocks in New York, Professor, on Tuesday closed lower. All three main indices down. Tech stocks on the Nasdaq in particular off by almost 1.9%. One factor was Walmart slashing its earnings forecast because of high inflation hitting consumers. What's the story in the global equity markets?
U.S. stock indexes ended lower as a mixed set of earnings report faced on unsteady path forward for markets ahead of a critical Federal Reserve meeting this week. The S&P 500 closed Tuesday lower by 1.2%. The tech-focused Nasdaq Composite declined 1.9%, and the Dow Jones shed 0.7%. The major indexes are holding on the modest July gains, but persistent inflation and signs of slowing economy are giving investors no leave to relax. This week, the busiest of the second quarter earnings session also brings a Fed policy meeting at U.S. Central bankers are expected on Wednesday to raise interest rate by 0.75% in their effort to tame rising prices. In Asia, major indexes in China closed mostly lower. Hong Kong's Hang Seng dropped 1.4%, and Shanghai index also retreated 0.1% as of 3 p.m. in Seoul time. But Nikkei 225 gained 0.2% today.
Well, Professor, Korean stocks today, coming off that decline on Wall Street, were down for most of the session, but rallied at the end to close slightly higher on the Kospi and with a bigger gain on the Nasdaq. Stocks that did well today had to do with health and biotech in view of this rise in COVID-19 cases we're seeing. Tell us about the domestic market.
Today, domestic markets continued its rising over 3 straight days. The benchmark Kospi added 0.1%, while Kosdaq advanced 0.7% today. As you said, Devin, the Kospi actually dropped down to 0.4% in morning session, but in the late afternoon, it recovered positive return. These volatile movements in the Kospi and Kosdaq represent domestic investors' more uncertain expectation on the future of Korean economy. Actually, IMF lowered Korean economy's growth forecast down to 2.3% from previous 2.5%. So domestic market is more easily shaken by new information. In Kospi market, individually investors led market rise with 212 billion wons purchased. Most of the large cap stocks were mixed as the whole market moved down and moved up. Samsung Electronics gained 0.2%, but the second largest cap, LG Energy Solution, retreated 0.1% today.
Well, looking at inflation, Professor, one big question is how much consumers think prices are going to rise. If they think they're going up fast, then it can cause things to spiral. Data show expected inflation in Korea is now at 4.7%. A month ago, it was under 4%. What does that mean for inflation, and what can be done to deal with it?
Expected inflation by households provides very important information on the path and length of the future inflation, because it shows the link between actual inflation and wage increases in the future. According to the Bank of Korea, the expected inflation hit a record high in July amid rising energy and commodity costs. Expected inflation hit a 4.7%, the highest since 2008 when the central bank began compiling related data. The July's expected inflation was up from the previous month figure of 3.9%. Consumer prices actually soared 6% in June from a year earlier, which is the fastest increase in nearly 24 years. Acceleration, a 5.4% on-year spike in May. It does look that Korea's inflation is likely to peak late in the third quarter or early in the fourth quarter if there is no sharp increase in global oil price and grain prices. So it is necessary for the government to explain current inflation situation to avoid the rapid wage increase demanded by workers.
Right. A large part of this issue is psychological and social. Professor, we're going to have to leave it there for today. Thank you, as always, for coming on the program. We appreciate it.
Thank you very much.